Hi traders, welcome to the Ken Tank, where you'll learn how to avoid getting eaten by the sharks on Wall Street. It's always all information for educational use only. I'm not making advice about what to buy, sell, or hold. Hello active traders, and welcome to another episode of the Ken Tank. In this episode we're going to be looking at the very strongest swing trading charts for this current upcoming week starting September 19th, 2016. What I want you to look for as we go through these 14 charts is the very strong pattern differences between these charts and what you may be looking at on your own. These are revealed for my Swing Scans members, along with the tickers and the specific long trigger prices used to avoid false breakouts that our members value so much. So let's take a look at what makes these charts so special. And let's go through these quickly. Here's the first one. What I like is the gap continuation. Again, gaps usually continue in trend, as I've taught for many years. We have a bullish cup breakout and a new high uptrend continuation in the upper right side of the chart. This next chart has a nice high volume breakout, very high velocity momentum play going from just under 27 to 30. So it ran 3 points yesterday, or I should say Friday. A good strong initial start to a trade that may continue on up in a in-trend continuation. Next chart is one that has traveled all the way from 33.5 to just under 40, and I like this type of chart because it has a 45-degree angle type breakout with new buyers coming in at every single new high. Every time sellers try to bring it down, buyers say, not so fast, we still want to buy this, and they buy it up at new highs, and it continues on up to take out new 15-day highs. And by the way, we always want to look at trading at 15-day highs. That's the best place to trade breakouts. Is going to be continuation plays, and I teach how to do that in Swing Scans. Something you'll enjoy once you join as a member. If you're not already one of my members, give it a try. Anyway, here's another one. You can see it's got 2 days of high volume breakout price action move right above resistance. Previous resistance, new support, 53.50 support line. It's ran up to just under 55.5, and it's starting to take off on new high volume. Here's another one that's been slowly climbing its way up. Now this is not as good a chart as, say, this chart. This one is more in focus. It's a cleaner, tighter breakout continuation. So if I had to choose between the two, I'd choose the first one. This one's still worth taking a look at because buyers are continuing to come in, and we had an especially strong session on the 16th. As you can see, it ran up to just over 25.30. Here's another especially good chart, a gap continuation. Again, that's my number one favorite swing trading and day trading pattern is buying gap continuations, as I've taught for so many 16 years now, plus to the trading community. A lot of people disagree and they say you should try and short gaps up and buy gaps down. Unless the gap is extreme, 20 or 30% of the price action, usually minor gaps attract additional in-trend attention from the professional trading community. So for that reason, this makes it to the list. Again, this is in my Swing Scans members area. The identity of this chart plus a specific long trigger to use to test out is there waiting for you for all of our members. Anyway, what I like best about this chart is not only does the trend continue tightly, but the price channel is relatively narrow and well defined, kind of like a laser, which is much better than a choppier chart, for example, like that one. So the takeaway is when you look for your charts, look for the cleanest, best defined, tight, like a piece of string tied tight in an uptrend continuation for new high breakouts. Here's another gap continuation. It gapped up, it ran up, did kind of a parabolic arc, it came back down to test support, held support, and continued the madness on up to the new highs off of a base of 20.50, ran up 4 points to 24.50. So nice high volume gap continuation momentum runner for a swing trade. And again, these are 15-day candlestick charts. These are 15-day charts that we're looking at. So you can see the dates down here. This is 15 days worth of price action. Notice too, please, the conspicuous absence of squiggly line indicators. I don't need or do not use a lot of the oscillation technical indicators. I'm a price action and volume professional trader, and that's what I do. So I'm looking for, if I've got a cut pattern that's nice, what happens next? A gap up. Okay, now it's got my interest, and maybe you hit it long and it continues on up. Anyway, this is an exceptionally good chart. This is one that my Swing Scans members got last week a week ago, as well as this past Saturday a couple days ago. So anyway, a nice strong continuous breakout going 44 to 55. Here's another one. It did a nice run up, kind of uptrend continuation. It's quieting down a little bit. The slope of the line isn't quite as sharp as, say, this previous one, but it's still worthy of consideration because it's held its highs despite market weakness. Here's yet another one that's even stronger. It's done a nice minor gap continuation with a nice good price range. Remember, I like at least 10% range of price. So, if I'm trading a $20 stock, it's got to have at least a couple points of range. Or if I'm trading a $50 stock, it's got to have at least 5 points of range between the low to the high. And see, the low of this chart is 50 and the high is just over 58.50. So that's 8 points of range on a $50 stock. So the risk reward is worth taking a look at. For those of you who like to trade cheap charts or inexpensive charts, here's one pick. It did a consolidation for a long time, not worth trading down there. But all of a sudden it picked up volatility and high volume on a 45-degree angle breakout. So that's of interest to us this upcoming week. Here's another one. Again, I generally have a great degree of caution and disdain for these cheap charts because they tend to zigzag up and down and they're easily manipulated if they have low volume. This one has high volume and it's a good breakout runner going from 4 to almost 8, so nearly doubled, and that's a really good chart candidate as well. If you do trade cheap charts, they should have a sustainable, what I call an acceleration ramp, as I've taught in my Money Show appearances and in my industry articles for stocks and commodities and elsewhere. You have a steady uptrend that then goes to a sharper angle breakout that's sustainable over 3 to 5 days and continues to pile in with new buyers. So that's a good chart. So anyway, those are a couple for pivot plays. I have a couple of ETFs here. That's one because the only reason I'd consider this for pivot is the price range is big. It's gone 30 to 40, so around a 10-point range in an ascending triangle here. And in this one, we did a nice big up and down wave type move. I want to see if it's able to recover the previous lows here and come back to life in this range. And again, it's got an 18 to 27, 10-point tradable range. And again, charts like this are outstanding for swing trades because you don't see any buyer's remorse or sellers coming in to take it down, up and down. So if you're having trouble as a trader, stop trading charts like this one, though it's still worth a shot. But if you do have to narrow your focus, stop trading charts like this one and start instead with charts like this that are better defined and have cleaner trading ranges. So anyways, I hope that helps. This is just a few quick tips of the types of charts that all of my Swing Scans valued members get. It's such a popular service. We got traders from around the world as members in Swing Scans, and the difference, learning, I think the biggest thing that my traders get out of Swing Scans isn't even just the picks or the alert trigger points and all the rest of it, but the training that goes into each broadcast that we do every single Saturday. After my week ahead broadcast, we have the premium Swing Scans broadcast, and I explain the differences between the patterns that are worth taking and those that aren't. One other level of analysis that I do is the 90-day candlestick charts. So we do multi-time frame analysis in every broadcast episode of Swing Scans. We do the 15-day, and then as soon as we're done doing 14 charts with the 15-day analysis, we then look at them on a 90-day basis to see the broader technical picture. And these kind of charts, this is that same exact chart on a 90-day basis. Look how strong it's gone, from 41 to just under 60 here. So you could have traded it pretty much anywhere along the way up and done well over 3 months of time, right? Or here's one of the other charts that my traders got a full explanation for. 90 days of price action going from 22 to 40, so almost a doubler in just 90 days. So, if you're losing money trading, it's probably because you're trading choppy charts and using large stops along the way. That's kind of two bad things to not do. You want to trade strong charts with tight stops, and that's what we specialize in teaching all of our traders in my Swing Scans premium events, and also as a members area. So if you can't make the weekly webinars, you can download recordings of the webinars, plus see the entire alerts table with the tickers identified and resistance areas or alert prices that you can paper trade with to test this out and develop a trading plan for yourself. So when it comes to trading, especially swing trading, raise your standards and start trading nothing but the best, right? Kind of like when you go to a restaurant. I only go to really nice restaurants. I don't go to cheap restaurants. As you mature as a trader and you start developing a more successful, focused, professional approach, one of the things that I found is, we all have choices that we can make. And I think when you start taking action, taking very specific strategic action and deciding never again am I going to trade choppy charts, and never again am I going to take big stops, but I'm now going to start raising my standards and trade the very strongest charts with the very strongest alert triggers identified for you to help you out. I think that's one of the things that you can really benefit from as a member in SwingScan. So anyway, that's it for this episode of the Ken Take. I hope that y'all do great in your upcoming swing trades, and I'd like to see you as a member. So you can try SwingScans at www.swingscans.com, specifically for stocks and ETFs in the $20 to $50, maybe up to $20 to $60 share range, and really have good potential, and hope that I can be part of your success. So thanks so much, and I'll see you in our next episode. Until next time, this is Ken Calhoun wishing you the best for successful active trading.